In January 2021, something unexpected happened on Wall Street. A stock that most professionals had written off suddenly refused to die. GameStop, a struggling video game retailer, shrinking stores, declining revenue, the kind of company Wall Street insiders love to bet against. Hedge funds were confident. They had studied the numbers. They had the models. They had the power. And then, millions of ordinary people pushed back. Not with billions of dollars, but with belief, anger, smartphones, and the sense that the game had been rigged for too long. This wasn't just about a stock anymore. This was a war between small investors and Wall Street insiders, and the entire financial system was watching. For decades, Wall Street worked on an invisible advantage. Hedge funds had access to faster data, private meetings with executives, advanced algorithms, and armies of analysts. Retail investors, everyday Americans, were told to invest for the long term while insiders made fortunes trading in seconds. One of Wall Street's favorite weapons was short selling. The idea is simple. You borrow a stock, sell it at today's price, and hope to buy it back cheaper later. If the company fails, you win. If it survives, you lose. By 2020, hedge funds had shorted GameStop so heavily that more shares were shorted than actually existed. Among those betting against the company was Melvin Capital, backed by Wall Street giant Citadel. To them, this was routine. Two small investors. It looked like a death sentence for a familiar brand. Then came a man with a red headband and a simple message. Keith Gill. Online, it was known as Rowing Kitty, a regular guy. No Ivy League pedigree, no hedge fund title. He believed GameStop was undervalued. He shared his research publicly, and thousands, then millions, net on forums like Reddit, Wall Street. Something powerful formed a digital crowd with a shared purpose. Buy, hold, don't sell. As the stock rose, hedge funds felt the pressure. Short sellers had to buy shares to cover their losses. That buying pushed prices even higher. This feedback loop became known as a short squeeze, and it exploded. GameStop stock surged from under $20 to over $480 in days. Paper losses turned into real panic. Melvin Capital lost billions. Citadel stepped in with emergency funding, but the story didn't stop there. As prices soared, trading platforms began to restrict buying. Not selling, only buying. The most prominent was Robinhood, an app built on the promise of democratizing finance. For millions of users, the message was shocking. You could sell your stock, but you couldn't buy more. To small investors, it felt like the rules changed mid-game. Anger spread instantly. Was the system protecting Wall Street at the expense of regular people? Congress demanded answers. In February 2021, U.S. Congress held hearings broadcast nationwide. Hedge fund managers, trading executives, Keith Gill himself, under oath. The uncomfortable truth emerged. The market wasn't as free as people believed. Clearinghouses demanded massive collateral. Platforms lacked liquidity, and the entire system depended on a few powerful institutions behind the scenes. The playing field was never equal, but something had changed forever. For the first time, retail investors realized their collective power. They weren't just dumb money, they were force. Since then, Wall Street has adapted. High-frequency trading firms refined their algorithms. Regulators discussed reforms, but moved slowly. Hedge funds adjusted strategies, limiting exposure to extreme short positions. Meanwhile, small investors learned hard lessons. Some made life-changing money. Others bought at the top and lost savings. The war didn't end with games. It continues in meme stocks, crypto markets, zero-commission trading, and social media-driven speculation. Today, Wall Street insiders still have advantages: speed, scale, influence, but small investors now have something new. Awareness. They understand narratives move markets, that transparency matters, that numbers alone don't tell the full story. This war isn't about winning every trade. It's about fairness, access, and trust. And the biggest lesson is simple. Markets are not just math. They are human. Fear, greed, hope, anger. If you're a small investor, your edge is not prediction, it's discipline. Understand risk, avoid blind hype, protect capital. Never forget, Wall Street can stay solvent longer than emotion can stay patient. But Wall Street learned something too. Never underestimate millions of individuals who decide to act together. So now the question remains, not just for investors, but for the future of American finance. in a market where power is concentrated but voices are multiplied. Who do you believe will truly win the next financial war?